Alright guys, welcome back to Only Divergences. Today is Friday, October 29th. Markets are closed. We ended the week and the month at new all-time highs on the S&P 500. In this video, I will be going over the S&P, what's going on. We've been in a huge rally, and I think everybody wants to know if and when we should brace for a real pullback, not these minor sort of hiccups that we've been having. So just as I outlined, the inverted head and shoulders pattern that we played out here using analogs, I want to outline exactly where I see the potential for a material pullback in the S&P in this rally that we have using similar analogs as well. At the end of the video, if the argument I've outlined makes sense to you, leave me a like and join us by subscribing to my YouTube channel. If it doesn't make sense to you, then please downvote this video and comment why my predictions are absolute trash, and we will see in a few weeks. So again, to provide context for the S&P, look, we were in this beautiful uptrend that was supported. There were trend lines that supported it, but it was supported by this 50-day moving average in blue here, which especially after this point here in March was just absolute perfect support. The trend broke and we came down to the 100-day moving average and we struggled, but we were able to hold this. We formed an inverted head and shoulders pattern, a nice little divergence, and it was off to the races. So is there any way to know where we are in this current move, this current trend move higher? Well, as a technical analyst, we compare it to previous moves. Now, there are far too many timeframes and indicators to provide an exhaustive analysis, so we will constrain our analysis to the daily and the hourly timeframes. On the daily, we can see that the current momentum divergence move on the MACD, we can see this large open move higher with a strong positive histogram. See these green bars here? This is a strong move off of a low. In the current bull market rally off of the March 2020 lows, we've really had only two instances that we can compare to the current one. The first was this post-election rally. So we can see here we had this big move higher after coming down to a low. And the second one was the post-March rally, post-March correction sort of rally earlier this year. The first thing I want to point out is that in both instances, we had volatility and down days along the way, right? So along the way to the point to short, right? So, you can see here, I think this would be considered the point to short. This was the move that you wanted. And back here in this rally, this was the point to short. This was the move that you want. And that was really it. That's all you got, 3-4%. So in both of those instances, we had an initial thrust, and then we had a slow, choppy market move higher before a pullback. And then here we had another more material pullback. Same thing. We had an initial thrust, which was lots of green days, choppy market sideways, and then a pullback. Does that mean that we have to have the same thing here? Absolutely not. This is a dynamic market and technical analysis works until it doesn't. We're just looking at this for the purposes of potential pattern recognition. And luckily, we do have analogs. So if we are comparing the current move to this one back here and this one back here, we have at least our initial thrust of this move, and we may still be in it, as the MACD is not exactly curling over. Notice that this thrust really ends when the MACD starts to curl over and this starts to come down, starts to come down. That's the initial thrust. It looks like we're still in it, especially with how the market ended today. So we have to know that there is potential that this market can actually continue a lot higher. The trajectory might have shifted here, which is something I'll talk about in a later video. Just as an aside, you will notice that the market headed higher today, despite both Apple and Amazon getting taken out back to the woodshed after earnings. Some might find this unnerving, but the way I see it is that these mega names are taking turns holding up the market. This week it was Google, Tesla, and Microsoft, and others. Next week it could be Facebook and PayPal, which have been beaten down a lot, or it could be other big names. But when those do decide to rotate out and form this, kind of odd market leadership it is very likely that Amazon and Apple will take the mantle and move the index higher. Either that, or you don't believe that Apple or Amazon will reach new all-time highs. And if that is the case, then, we got to have a different conversation, right? Because look out below. But I digress. So where are we in the S&P? We are in a slow, well, I was going to say we are in a slow, choppy market, but it is choppy. I mean, we're only a hair above where we were on Tuesday, right? So let's not look at this green candle and think, oh, well, it's off to the races. We've actually technically been consolidating for 4 days. So the one thing that we know about consolidations is that if there are bearish patterns within them, then they resolve to the downside. But if there are not bearish patterns in them, then they generally do resolve to the upside. And I have to be honest, this looks like it does want to resolve to the upside, especially after hours were already green. We ended the day, the week, and the month at all-time highs. Come on. So does this mean that we go short? Absolutely not. I mean, we just talked about this. If we're going to use the analog, we have to understand that we are very, very far away. Just by looking at price, we're very far away from a potential area that we would want to go short. We can see that in the previous analogs, even though the gains post-thrust were less relative to the initial thrust, obviously, the market did still creep higher, even though it was, a volatile creep higher, right? And honestly, until we get something material to break this trend, that is what I favor for now, because it would be a repeat of previous moves higher. We could even accelerate higher, in fact, because look, our trajectory here looks to have shifted. So I really do think that this could go. We've hit new all-time highs. The only really thing that we want to look for in terms of next potential resistance, I think, would obviously be this kind of general area, which has been resistance. I wouldn't be surprised if we do touch that area. I've been talking about the fact that we had this trend line from way back here, which was the initial break of the trend line. Remember a few weeks ago when we started this channel, we had this trend line here, and as soon as we broke it, we said, okay, well, it's going to take something more before this market is ready to go. Well, after we started bouncing, I said, well, you want to take a look at that trend line again. So we are, let's just double check here. Yeah, we are just at it, right? And so, okay, it would be reasonable maybe if we got a little bit of profit taking here, but we could just as easily pop right above it and then return to that previous trend line I was talking there, or even higher, to be perfectly honest at this stage. Another thing is that, I like to stick with the technicals, but seasonality suggests that the market can rally very strongly into the end of the year. That said, I do want to take a broader look at the S&P, and I will do that over the weekend in a separate video because there are a lot of things going on, a lot of moving parts, and I have to say, even though the market looks a little crazy right now, a lot of those moving parts do suggest higher prices ahead. So the question then is, what can stop this rally? Well, if we use the previous two comparisons and ask what stopped those rallies, we have to outline a few things. First, both rallies continued for months after they started. And the material pullback, well, this one maybe was just about a month, but we had pullback here, but then the rally did, the way you would define this is a little different. Depends on how much risk appetite you have in terms of, eating 4 or 5% pullbacks like this, and then another one here, because you have to really appreciate the fact that, let's say you bought here, months later, you're only up about 1% down here, right? Now on the daily, I want to point out something, and I want this to be on the record. The question we really want to ask is whether there is any objective technical signal that we can look for in the future that would indicate that we will have a pullback, meaning we should be ready for an interesting short move. So is there an indicator? Yes. It is this one down here, which is the DMI. And in this video, I want to quickly show you that you can use this indicator to relatively accurately predict where the next potential pullback is going to be. Now, markets rhyme rather than repeat, so you cannot ascribe 100% of your analysis to any time frame or any indicator. All that stuff you have to decide for yourself. But with the DMI here, I notice a few things that are worth pointing out. Actually, there are a number of things, but I just want to focus on one. And it's this green, I'm going to get rid of the MACD here just so that we're a little clearer here. It's this green line. Keep your eye on this green line here, okay? This is very important. This green line indicates bearish movement. That is to say that when it is up, that is after a move lower. You can see we moved lower, and as a result, we accelerated higher. You can see that. And when it is down, that is after a move higher. So you can see we've been moving higher, and it's been moving down. Here, it's been moving down, moving higher. Let's just focus on the analogs that we have here. We can see in this one, it moved down, down, and price is moving higher. Move down, price is moving higher. Now, in the previous bull runs, these rallies that we are comparing, you will notice that this not only got way down here to this level, so you can see in this previous rally, we got down to, I think the level somewhere around 1250 if you want to be precise with it, but it's really just this level here. You can see we had to move here, we had to move here, and that was, this green level got down here. And in the previous rally, it got down here too. So in both rallies, notice something. It got down here twice. Okay, two major moves. I want you to keep that in the back of your mind for now. So when we look at these two rallies and their end, when they had the pullback, we notice actually, so this is the pullback that I'm talking about when we talk about these rallies, these sharp negative moves, 3-4% in the matter of days. This is what I'm talking about. We notice that this DMI indicator objectively provided us with the signal. So what was that signal? Well, it was on a rally of the market that happened after we had already hit a low in green and popped back. So what do I mean? I mean that here we're rallying, and we hit a low in green, and yeah, we did get a pullback, but that was immediately bought up, right? Same thing here. You're rallying, we hit a low in green, and yeah, we got 3 days of pullback, but that was immediately bought back up. It wasn't until at least the second move. So notice that we had a second move down here in green, and that gave us another pullback, but then we had a third move in green, which was a higher low. Notice this is higher than this one, and that was the move. Same thing in March. We had this low, then we had a second one, and then we had a third one, which was a higher low, and then that was the move. So assume that we want to see this pattern repeat itself in the current rally. What we expect is that green will continue to fall here, and given its position, we probably should expect that it falls quite a lot. And so when this line does eventually get down to this level, yes, we should expect a pullback that's a little stronger than what we had here. This isn't really a strong pullback. This wouldn't be very strong. This wouldn't be the best thing to short here because there's really not a lot that you can do here. And then you would then, if we continue to repeat the previous move, we would then expect a rally. So you would want to buy after we get that pullback, and then we would have another one, and then it's that third one, that third rally after green already starts moving higher. That's where we think we get the move. And look, it happened here just on a different time frame. We can see that green was struggling to come down, and here it came down, pop. Here it came down, pop, and then when we had this divergence where we had a low green here, but then a higher low green here, bang, we came down. And notice that as soon as green gets up to this level, that's where you want to buy. I mean, almost in we've talked about this in previous videos. Whenever green gets up to this level, that's where you want to buy, right? Obviously, there are contextual factors that will change how you want to do that, but that's generally how you want to use this DMI indicator on the daily. So if that's the case, and we've pinpointed that on the daily, we could go further and ask, how do I know that the higher low is the one? So you can try to find that third higher low. I mean, that is the objective one. But to answer it, you'll have to go probably into the hourly time frame to find that pattern. There is no doubt that as we move higher, I will continue to hone my analysis and see if this does play out. Look, the last few moves on the S&P 500, one, the trend line break, and then the inverted head and shoulders, we called. Okay? You can go back and watch my videos. We called those perfectly. Basically, what I want to do in this next call is find out when we will technically exhaust this rally. Right? I want to find the exact technical indicator that will let me know when we're done. Now, I will say, based on what I can see, it looks like this is some time away. Now, that does not mean that we will not get pullbacks. I think we will, but generally it will take time. And until we get the bearish signal, I think it is best to focus on individual stocks, as I've been saying, stocks with bullish divergences, because there are a few that come to mind. Some of them have been beaten down unnecessarily, and I'm going to be saving that for the weekend video. I see some opportunities this week. So that is basically what's crystallizing in my mind right now with regards to precise and acute trade opportunities in the S&P 500. And although many have commented I should get a Discord or start my own service, what I want to do is call this perfectly. Okay, so I will be conducting some rather rigorous analysis of this potential play and track it as we get there. That does not mean I will not be in any trades. I will just probably be in less, and I just want to wait for that moment so that we can kind of orchestrate this move together. And look, I do mean perfectly when I say accuracy of this trade. I want to basically outline the exact moves of this trade before it happens, similar to what I did in the Upstart short video from way back when, which I think the options on that returned something like 7 or 8 times. I'd like to do that here with the S&P, as this is what I see, but I have to say I am inclined to think that we are not there yet. In fact, we're nowhere near there yet, as the objective technicals do indicate. So that is what I'm looking for. Let's get the green to come down, and continue to come down. Continue to come down and then form a higher low and then kind of curl up similar to what we had here or here. That does suggest that we rally into the end of the year and rally likely quite strongly. So once again, I will be taking a broader look at the S&P 500 and other stocks this weekend, so make sure you subscribe, and thank you for watching, and don't short until I say so. Again, if you think this technical argument is trash, please downvote this video and let me know in the comments why it is not accurate. Thanks for watching, guys. I'll see you later.